What if I told you that a $1,050 investment today could potentially become $10,000, $20,000, or even more over the next 3 years, without buying a single share of stock? Today, I'm breaking down why I bought 10 January 21, 2028 BigBear.ai $5 call options at $1.05 per contract. This isn't gambling. This isn't a YOLO trade. It's a calculated leap strategy based on one investment thesis. Defense AI could become one of the biggest investment themes of this decade. Today, I'll show you why I bought BBA instead of Palantir, why I chose the $5 strike, my maximum downside, my upside scenarios, and why I'm willing to hold this position until 2028. Why BigBear.ai, the defense AI opportunity? Most investors think AI means NVIDIA, Microsoft, OpenAI. But governments around the world are spending billions on something different. Defense AI, military intelligence, autonomous systems, predictive battlefield analytics, mission planning, real-time decision support. This is exactly where BigBear.ai operates. Unlike many AI startups, BigBear.ai already works with government and defense customers. That gives it exposure to one of the fastest growing AI markets. Why now? The world is changing. Defense budgets are rising. AI adoption is accelerating. Governments increasingly view AI as a strategic capability for national security. If that trend continues over the next several years, companies that successfully deliver AI solutions to defense and government customers could benefit. That's the long-term theme behind my trade. Here's what's happening in BUY's options market. Now let's look at what the options market is telling us. Current stock price, $2.87. January 21, 2028. Call options. The option chain immediately caught my attention. $5 strike. Ask price, $105. Open interest, 15,999 contracts. Delta 0.600. That tells me this isn't an abandoned option. There is already meaningful participation at this strike. Now look at the $10 strike. Open interest, 280,885 contracts. Even more traders are positioning for a larger upside move. That doesn't guarantee success, but it does tell me that many market participants are looking several years into the future. What are LEAP options? LEAP stands for Long-Term Equity Anticipation Securities. These are options with expiration dates extending well beyond 1 year. Why do I like LEAPs? Time works in my favor. I don't need BigBear.ai to move next week. I have until January 2028. Less capital. Instead of buying hundreds of shares, I control the same exposure with significantly less money. Higher upside. If my investment thesis proves correct, LEAPs can appreciate much faster than the underlying stock. Why I chose the $5 strike. BigBear.ai was trading $2.87 when I entered the trade. So why didn't I buy the $2 strike? Because it costs considerably more. Why not buy the $10 strike? Because the probability of success declines substantially. The $5 strike gives me exactly what I'm looking for. Reasonable premium, strong liquidity, good delta, and enough leverage if BigBear.ai experiences a meaningful recovery. To me, it's the best balance between probability and upside. The psychology behind the trade. This isn't a lottery ticket. I'm not expecting BigBear.ai to double tomorrow. I'm investing in a 3-year story. I'm betting that defense AI spending grows. The company wins additional contracts. Revenue improves. Investor confidence returns. If those things happen, today's valuation could look very different in 2028. Potential scenarios. Let's assume I buy 10 contracts at 1.05. Total investment, $1,050. Stock at expiration, $3. Loss of most or all premium. Stock at $5. Approximately break even on intrinsic value at expiration. The premium paid means you would still need the stock to move above your effective break-even before realizing a profit. Stock at $7. Intrinsic value equals $2 per share. Each contract would be worth about $200 before considering any remaining time value or transaction costs. 10 contracts would be worth about $2,000. Stock at $10. Intrinsic value equals $5 per share. Each contract would be worth about $500. 10 contracts would be worth about $5,000. Stock at $15. Intrinsic value equals $10 per share. 10 contracts would be worth about $10,000. Stock at 20, intrinsic value equals $15 per share. 10 contracts would be worth about $15,000. These examples assume you hold until expiration and ignore the remaining time value, implied volatility changes, commissions, and taxes. Real option prices before expiration can differ substantially. Risks. Let's be honest. BigBear.ai could fail. The company could dilute shareholders. Revenue growth could disappoint. Government contracts could slow. AI enthusiasm could fade. And my LEAP options could expire worthless. I'm fully prepared for that outcome. That's why I only invest money I'm willing to lose. Final thoughts. I'm not buying BigBear.ai because I know where the stock will be next month. I'm buying because I believe the next decade belongs to AI. And I believe defense AI will become one of the most important segments of that market. If I'm right, this could become one of my best LEAP investments. If I'm wrong, my loss is limited to the premium I paid. That's exactly why I love LEAP options. What do you think? Is BBA a smart LEAP play, or am I chasing AI bubble? Drop your thoughts in the comments below. Thanks for watching Stock Market Analyst. Stay informed, invest wisely, keep growing.